Welcome to Explain the Charts. Today, April 30th, 2025, we're analyzing EURUSD, combining current events and detailed chart analysis. Let's start with the news. Recent data shows a contracting U.S. economy due to increased imports ahead of tariffs. Meanwhile, the ECB recently cut interest rates. Trade tensions remain high, with China retaliating against U.S. tariffs. These factors create a volatile landscape for the euro against the dollar. Now, let's move to the EURUSD daily chart. We can see a recent period of volatility, marked by both upward and downward swings. Notice the overall trend since late 2023. It's been quite choppy. There have been multiple runs upward, followed by downward consolidation periods. There was a large spike upward in early April 2025, where it jumped from 1.08 to over 1.12, but it's since come back down. The recent one-day candle shows the price is 1.139. It opened at 1.14073 and closed at 1.13898, a slightly bearish trend on this day. Looking at the past month on the daily chart, we see resistance forming around the 1.145 level. Support seems to be around the 1.08 level, and it has bounced in that region a number of times. The pair is currently trading near the middle of this range, indicating some indecision in the market. With the U.S. economy contracting and the ECB cutting rates, the fundamentals suggest a possible bearish move in the long term, pushing the price down to test support. Let's zoom in on the 1-hour chart to get a clearer picture of more recent price action. Looking at April 29th, we see a series of smaller candles, indicating a period of consolidation. There's a slight downward trend visible here, suggesting some selling pressure throughout the day. Key levels to watch on the hourly chart include resistance around 1.142 and support around 1.137. If the price breaks below 1.137, it could signal a further move downwards, aligning with the bearish sentiment from the GDP data. However, if the price manages to break above 1.142, we might see a test of higher resistance levels. For short-term trades, the 15-minute chart can be helpful. It shows a very tight range for the last few hours. There appears to be almost no volatility. Given the lack of clear direction on the 15-minute chart, it's probably not a good environment to trade until more prominent trends appear. We need to wait for a breakout from this consolidation phase before considering a short-term trade. Be aware that news about Bitcoin ETFs could make investors pull out of EURUSD, sending the price down. In summary, key price levels to watch are 1.08 as major support and 1.145 as major resistance on the daily chart. In the short term, keep an eye on 1.137 and 1.142 on the hourly chart. A break below 1.137 increases the likelihood of testing lower support levels, possibly down to 1.08, driven by contraction of the U.S. economy. This is fairly likely, maybe a 60% chance in the next couple of weeks. A break above 1.142 could signal a short-term bullish reversal, but it is less likely, maybe a 30% chance. The FOMC meeting on May 6th to 7th could be a catalyst for a major move, especially if they signal a potential rate cut. Also, monitor U.S.-China trade developments closely, as easing tensions could strengthen the dollar. Good luck trading, and be sure to like and subscribe to Explain the Charts.